Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes on Thursday, the 30th of January. Starting off with Chariot Oil and Gas, where with this long candle there, breaking the 50-day moving average in that line of resistance from November at 3.39, seems to be that the shares are in play from the bullish perspective. Situation now is that end of day close today would imply the stock has enough gas in the tank to hit the top of a rising trend channel, which I'm just trying to draw now at 4.75 pence over the next few weeks. I suppose if you're cautious on the stock, maybe wait for a weekly close breaking 3.5, which was the initial January resistance. But with that candle and the move today, so far, it looks as though the shares are or maybe on their way. One of the more difficult situations around at the moment, which we don't want to shy away from, of course, is cloud buy. Here you can see there was potential of a breakout of that falling wedge at 0.5 pence, but the shares never quite did it. But we still actually have a falling wedge in place, and even more intriguing, we have an RSI which is at 13 out of 100, which is about as oversold as you see a stock or market get. I mean, that's really on the ground floor. You can see that very occasionally gone down to those levels, and on both occasions, both in March and July, the shares did actually give us a rally of sorts. Current trigger for a potential rally would be an end of day close above 0.2 pence, which is that January resistance line. But obviously, as you can see from the history of the stock, obviously better to wait and be late rather than jump the gun. If we do get that, then the target back to 0.5. So I suppose the risk reward there is in play. On to a stock which has the Twitterati chattering. I did cover this, I think, just as it emerged from that triangle, Dev Clever, that is, around the 1.2 pence level. There was a bit of a rally and then it came back and everything else, but it looks like it's finally on its way, clearing the 50-day moving average very nicely and easily so far at 1.64. And the target, which was there before, up to rather ambitious sounding 3 pence, which is the top of a rising late October trend channel. At this stage, early alarm bells really if we have maybe a couple of days back below the 50-day line, but at least while we're above that initial spike that we had at 1.7 last week, this stock looks reasonably set fair. On to the stock of the day and perhaps the week, and who knows, even in the end of the year. We've got Greatland Gold. Here the shares have actually broken or beaten the initial target I had when the stock, I think the last update was just around the 2.5 pence, so we've beaten the 3 pence target. And for those who may be interested, the next level up, you've got to go quite far back to see where that might be, from a resistance line from October 2017. And the target there would be up to around the 4.5 pence area. That valid really while we hold above 3 to 3.2, so old resistance becoming new support. Obviously the stock very overbought, but in all the excitement now, these things can and do overshoot on occasion. Next up, Petrel Resources, where I see some people are willing to go back up higher. A little bit more complicated than that at the moment. Probably need to see an end-of-day close back above the 50-day moving average, rising at 13.45 pence to deliver that. There's also a line of resistance where the stock failed last week from November, running around the 17 pence level. So, as I said, a bit more complicated than maybe some would like it to be, but end-of-day close above the 50-day line would be at least the first trigger there, if the shares can rehabilitate themselves this time. Up to a stock which used to be a Bulletin Board favourite and sort of cooled off a bit, but Pan-African of interest on a technical basis at the moment because of the because we were just in the run-up to a golden cross between the 50 and 200-day moving averages. We've also got this pattern here, which is basically an inverted head and shoulders post-September, which is exciting. And a break of neckline resistance at 13 pence would maybe indicate that the shares are ready for a new leg higher. Just how far they could go is indicated by the rising trend channel that I'm just drawing at the moment, so up to about 17 pence. If you're somebody who wants to try and jump the gun, maybe a break of 12.3 pence, today's intraday high, on an end of day or end of week close basis to break that January resistance line could be the trigger that you're looking for. It would effectively break this January triangle formation that we have at the moment. And as I normally say, the run up to to a golden cross between the 50-day and 200-day moving averages is normally the strongest part of the cycle. Let's see if that works on this occasion. New stock for the Bulletin Board Heroes comes in the form of Sensign Health, where we've broken out of this falling wedge a couple of days ago now. We had a nice, long, strong candle yesterday, which suggests that the bulls are in favor here. Also, the RSI over 50 as well. So basically above the breakout level at 50 pence, which is where that November line was broken, we could see reasonable upside here. Initial target, obviously, the 50-day line at 70 pence, but the big target up to £1.40, which is the top of the broadening triangle, which the shares have bounced off. So plenty to play for there for the bulls on this particular situation. Finishing off with a stock which has had a rather bad press recently in terms of, I think, placings and other things, but the chart not quite as bad as the doomsters might suggest at the moment. I suppose there is an uptrend line there from the beginning of the month, and the shares have bounced off that today. That's running through, what's that, 0.27 pence. And so, at least while we're above that, there's a possible recovery here. A line of resistance running through to 0.33. So that's really the level to break if the stock is going to get up to the dizzy heights of 0.5 to 0.55, which was seen in October. So reasonably constructive, at least while we're above 0.27. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.